You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
In that book, I said that one of the big risks for silver investors is that silver would have a shortage. And this isn't necessarily a good thing, because if we have shortages, then they're going to, the G7 basically is going to say that silver is a strategic metal. And if it's a strategic metal, then they're not going to sell it to the public anymore. You'll be able to sell yours back, but you won't be able to buy it. You'll be able to buy sovereign coins, but you won't be able to buy bars. 1,000 ounce bars, those are off limits for sure. But I think they'll take it down to 100 and even 10 ounce bars where you can't even buy those. So once that happens, I think the price of silver crashes. Now, when does that happen? I think we're fine until we get to $75 silver. Some guy this week said 100. He probably is right. But once you get to somewhere around $7,500 silver and you have some serious shortages, the manufacturers are going to start screaming, saying, we can't find our silver. We're shutting down our plants.
In today's show, you're going to hear from my friend Don Durrett over at goldstockdata.com. And it's been a couple months since we spoke with Don. So Don, welcome back onto the show. And we've seen some volatility in the gold and silver prices, and it seems to be trending down. There's debating whether we've seen the bottom or the bottom is still to be had for this current phase of where the gold price is going. What's your current take on what's happening in the precious metals right now?
Well, it's a really tough question to answer in a short amount of time. It really takes about 5-10 minutes to answer this question because of the complexity. But I'll give it a shot here. So my thesis was going back to November that I thought that if Biden won, that it was going to be really good for gold and silver, because I didn't think the market would really like a Democratic administration coming in. But that didn't hold. So once we got to January, we saw how the market, gold and silver, reacted in November and December, and the markets overall. We haven't had a correction since Biden was elected in the stock market. And so we've had this risk on trade, and nobody really cares about gold. And so we got to January, and I became bearish, and I basically been bearish since. And I've been saying that gold is trapped. And what I mean by trapped is the only way that gold can basically make a run and get to, say, 1900 and then make a run to a new high is if that risk on trade flips and we go to a risk off trade. So basically that's going to require a correction. So I've been expecting lower silver prices, but I don't know what the bottom is going to actually be. We traded under 24 yesterday. I think it's probably going to trade when the correction comes. Again, I'm expecting a correction in this quarter, the next one, Q2 or Q3, of at least 10%. So if that happens, I think silver is going to go down below 22. So we're looking somewhere between 1850, which is the breakout, 1850, 1870 is where gold broke out last July. So we're looking at somewhere between there and 22. And I wouldn't be surprised if we go all the way to 20 when this correction happens. So I was hoping that gold could hold like 1800 and silver could hold 25, 26. So when the correction came, 1850 wouldn't be in play, but now they kind of are, which is kind of scary. But the other side of the coin is that if we look at that's why I said this is a long question, tough question to answer, is if you look at all the factors that are kind of going into the gold price right now, and all the factors that are kind of supporting the market, again, this risk on trade, we haven't had a correction. You have the COVID issue. I mean, people are going to start going back to work this summer, but it's going to take until the end of summer until everybody's back at work. And we won't really even know. Like when I do my newsletters, I've been ignoring like the PMIs, the employment rates, all that stuff, all your macro numbers. I've been ignoring them because until people go back to work, we really won't get an understanding of the full strength of this economy. So we're going to have to wait till, August, September before we really get a feel for the strength of the economy. And that's investors right now are kind of just ignoring the macro fundamentals and basically expect, for instance, the stock market being really high. They're ignoring it. They're just expecting the economy to come back. And I'm just questioning that. And I'm questioning the strength of the markets, how much MMT can work here. It's to me, it's somewhat delusional, this whole MMT expectation that debt doesn't matter. I mean, that's really the new theme. Debt doesn't matter. We can borrow, $2 trillion at a time. I mean, we just had a $2 trillion stimulus bill. And today Biden came out with a dual BBB, Build Back Better program. Both of them are over $1 trillion. So, we're looking at, and he's going to raise taxes. It's the corporate tax rate. It's going to be raised for the first time since the 1940s. Let that sink in. And I've been talking about this, about how this is really the first change in the American economic policy since the 1980s. And everybody's ignoring it. No one's talking about it. Sorry for the long answer, but that was a tough, that question required it.
So Don, Trump was a borrow and spend, and Biden seems to be a borrow and tax and spend. So what's more bullish for gold here? Is it Biden's, how he operated, or Trump?
Oh, Trump basically scared me as far as being a gold investor. I mean, I remember back in 2016, the night he won, I went out to my car and I before I turned on the key, I remember this vividly. Before I turned on the key, I was like, oh no, gold's going nowhere, gold's going down because Trump is going to be a pro-business guy. And he was, and gold did nothing during his term. And I was pretty much right. Biden is not a pro-business guy. And the only thing that hurts gold is a strong economy. The only thing that pushes gold to new highs is what I call the fear trade. And the big money isn't going to buy gold unless they're afraid. And right now you have this risk on, they're not afraid and they're not buying gold. So Biden's going to make them afraid at some point because he's not pro-business. I mean, you can't raise the corporate tax rate and expect that to be a pro-business type of a move. And on top of that, this economy was much weaker than people really acknowledge. The only reason why we had GDP growth from 2016 or actually 2012 forward is because of all this debt that we've added. A lot of people don't realize is that when we print money, that goes to the GDP. Government spending is part of GDP. If you look at the GDP for the last 12 months, it is including all that printing, which is an illusion. That's not so. The underlying strength of the economy is a lot weaker than people assume. The 1% are doing fantastic. The top 5% are doing fantastic, but the middle class is getting squeezed, and that's a reflection of the inherent weakness of the U.S. economy. We're no longer the dominant force. This goes back to my first question. I said there's a lot of complexities here. I think that Southeast Asia is now the dominant economic force in the world. No longer is the West, Europe, and the United States the economic engine in this world. GDP-wise, they're bigger. We've added all up. I mean, the U.S. is number one, and Europe is right behind us. I mean, if you just as a group, and Asia, but those are the three big groups, right? You got United States, you got Europe, and then you got Asia, Southeast Asia. I think they're the new dominant area, and I think that the dollar is going to. We're playing with fire right now, thinking that we can borrow all this money and weaken the dollar and remain the dominant economic force in the world. I think this is a transition point myself.
Don, as you know, it's in the economic world that everybody's been talking about the rising interest rate on the 10-year treasury. Do you think that needs to peak out before gold begins the next phase of the upcycle as well?
Yeah. So this is all speculation, right? We don't know exactly how higher interest rates are going to impact everything. All we can do is guess. But I think that higher interest rates are basically bad for the economy, and the stock market is ignoring it at this point. I mean, Dow's at 33,000, basically all-time highs, and interest rates are rising. So, we got the 10-year at 1.7 today, 1.73. If it gets to 2%, I've read where people think that is going to get the stock market to correct. And it probably will. And so then you're talking about something that the Fed has never done ever, which is what the Japanese have been doing, which is called YCC, yield curve control. So the Japanese back in 2016, they basically pegged their 10-year at zero. and they started buying bonds. That's MMT in action. And so now everybody's saying, well, the Fed is going to have no choice. They cannot allow the 10-year to rise above 2%. So they're going to have to peg the 10-year. Well, I'll tell you what, it's not going to work. There's a difference between the Japanese economy and the U.S. economy. There's basically three differences. The first is that the yen is not a global currency. So they don't have this pressure, external pressure that we have. For instance, when we debase our dollar, the rest of the world that's using those dollars, they take a hit because the dollar's value goes down. So when they're selling their goods to us, they're getting less back. That's not a good thing. It's basically we're exporting inflation to them. The second thing is they basically internally pay for their debt. Foreign countries don't own it, very much of their debt. They do it all internally themselves. So they don't have that risk of a third country putting pressure on them, such as Japan was selling last week a lot of treasuries. That puts pressure on us, right? Japan doesn't have pressure. The third one is probably the most important, the most significant. They're a mercantilistic economy. They have a positive trade surplus. So it supports their dollar. We have a negative surplus. I mean, it's like night and day differences between the two currencies where they've been able to get away with MMT and not have inflationary pressures. And we think we can. I think it's fantasy. I think the dollar is going to end the year below 88. If it ends the year over 90, I'll be very surprised. But I just think that this is a transition point for the U.S. economy, and that at a certain point here, I expect gold and silver to find a bottom. And if we can get above $30 on silver and above 2,000, then we can get a new bull run here. The bull run can continue. Now, those are the levels that I think we can basically say, yeah, we're back in a bull market. But I think you can go lower than that for when the bull market actually, you can anticipate it kicking into gear, which I think would be 28 on silver and 1950 on gold. So those are real targets to look for.
Tier 1 Silver is a Canadian precious metals company focused on the exploration and discovery of world-class silver and gold deposits in Peru. The company's management team has a record of monetizing exploration successes and a strong ability to raise capital. Tier 1 has assembled a portfolio of assets in Peru, including Amelia, Coastal Batholith, the Wheel I Coyo project, and the flagship silver-gold project Curibaya, which is rapidly advancing towards its first drill program. Tier 1's listing is pending on the TSX Venture Exchange under the ticker TSLV. To learn more and to stay updated, go to tier1silver.com. That's tier1silver.com. Okay, so if we're going to still see a dip, seems to be what you're looking for. Have you been on the sidelines with cash? I see the list you put out on Twitter and on Seeking Alpha. Do you have your targets out there that you're looking to buy if gold and silver hit those levels?
Yeah. So back in January, when I turned bearish, at that point in time, I started creating a list of stocks that I wanted to buy on the dip. That list has grown from January to March to 15 stocks. So I don't know how many of those 15 I'll buy, but probably at least 10 of them when the dip comes. So yeah, I've basically been accumulating cash and accumulating a list of stocks that I want to buy on the dip. I always like to buy dips. I mean, that's when you get really good entry prices. And it gives me an opportunity to improve my portfolio, kind of fill in the blanks, buy stocks that you don't own that you wish you owned, kind of thing. And yeah, that's how I've done it as a long-term investor. I always thought of gold and silver as long-term. I never invest in the stock for 1 year. Never, never, never. It's always 2 to 3, 5 years down the road is always my target. I'm always a long-term investor. So buy the dips for the long term. I'm not expecting, 2013. I mean, if we go back to 2012, in 2012, we peaked right around 1930 on gold. Over 18 months, it dropped 40%. So we went from, let's say if you use 2,000 as a round number, it dropped to 1,200 in 18 months. And so now we're down, from almost 2,100, we're down to 1,700. But, I don't think we're going down to 1,300, down another 40% move over 18 months, and 2013 repeating itself because of all the factors that I talked about before. But it's not inconceivable that MMT works and that the economy starts roaring back this summer, and everybody and inflation stays under 2.5%. And we have that's a possibility. And silver just gets stuck here at $22, and gold gets stuck at 1650 to 1700. I mean, that's not an impossibility. It's just not what I'm expecting so.
Don, would you be willing to share maybe a couple names, those targets you have to maybe buy if gold and silver dip down?
I posted my list on my website.
Or let me ask you this: one thing you always say is you look for not just companies that are going to produce from their first mine, but you like to identify junior producers that are about to bring on their second mine, and that's often when you get another nice share price re-rating. Are there any second mine producers that you have your eye on right now?
You mean companies that own one and that I think they're going to get a second one?
Yeah, the second mine is about to come online.
Yeah. Well, I'll answer that in a second, but first I want to talk about my list. So I already own 150 stocks. I'm like Eric Sprott. I own everything. But I own very small cost basis on exploration and development stocks. I mean, like 0.5% or less, small positions. And most of those, but I'm overweight producers. So most of when I take a position in a drill story, a development story, I take a small position. Just again, a lot of it is to have fun. It's like, but where I'm overweight is in producers, and that's where I expect to make my money. But and at this time, there's not a lot of producers that are cheap. I know I have Karora on my list. I want to buy them on the dip because I don't own them. But that's another one that they're kind of a one mine stock that I think is going to probably add a second one. Another one that I don't own that I think is going to be a second mine is Pure Gold. I think they're going to have a lot of cash flow. Another one is Gatos Silver. They have a single mine. They just came in. They don't have any debt. I think they're going to add a second mine. Those three look really good for, Pure Gold's building their mine, Gatos in production, Carrera's in production. Those are the kind of companies that I look for, real quality single mine companies that I think are going to add another one. Another one, K92. K92 is a single mine, great, fantastic cash flow, great exploration. They'll probably add a second one. Then Rox Gold, another one, single mine. So I look for these single mine companies, but I like to get in them early, of course. I don't like to wait around. Karora kind of got away from me. I didn't realize how good a property it was, but now I'm realizing it's a really good property. Another one I have on my list that I want to buy the dip is Vangold. I mean, I looked at it originally. I didn't like it that much. Then I re-looked at it and it looks really good. I'm really impressed. I think it's going to, they're going to start off mining about 2 million ounces. And so that's pretty good. If they can just maintain that and then expand their resources. So that's another one. So there's a long list for you. But I do want to say something about this silver squeeze. So I've been in the silver squeeze movement, if you will, since like 2008. I mean, I go way back. Actually, probably before that, but but I would say, because I didn't even start my website till 2012. So who was I really communicating with? I wasn't communicating with a lot of people back in 2008. But as far as an expectation of a silver shortage, I was in it really early. I've been saying that there's not enough silver. So once the investment class wants, say, 40% of supply, and last year they did. So the inventories are starting to shrink. Once there's basically 1 billion ounces of silver supply. And if the demand is about 40% by investors, which is 400 million ounces, last year the ETF soaked up almost that much. Once the investors want about 40%, it won't take long to basically empty out the drawers. And the only thing that you're going to get silver is from the mines. And it's basically a just-in-time inventory system for the manufacturers. Their silver, I would not be the least bit surprised if a lot of these companies' silver is coming directly from mine. Not directly, I mean, they basically mine it, comes out of the ground, goes to a refinery, goes to a manufacturer, right? That's their just-in-time inventory system right now, I think. It's pretty close to that. My point is this, is that there's no middleman, there's no inventory. There's no place where that inventory goes and sits, and then basically Sony calls them up, or Apple calls them up and says, okay, or Apple's vendors call them up and say, okay, I need, 2 tons of silver, whatever. I think it's getting to the point where we almost have a just-in-time inventory system, or we're going to have one. And so what's going to happen is you're going to get competition between investors and fabricators. And it's basically a 60-40 kind of split right now, I think. And it's getting tight. And so I've been saying this for 12, I've been thinking this for like 12 plus years, or at least more than that. I wrote this in my book. So I wrote my book in 2009, 2010. I think the first version of my book came out in 2010. So I wrote it in 2009. In that book, I said that one of the big risks for silver investors is that silver would have a shortage. And this isn't necessarily a good thing, because if we have shortages, then they're going to, the G7 basically is going to say that silver is a strategic metal. And if it's a strategic metal, then they're not going to sell it to the public anymore. You'll be able to sell yours back, but you won't be able to buy it. You'll be able to buy sovereign coins, but you won't be able to buy bars. 1,000-ounce bars, those are off limits for sure. But I think they'll take it down to 100 and even 10-ounce bars where you can't even buy those. So once that happens, I think the price of silver crashes. Now, when does that happen? I think we're fine until we get to $75 silver. Some guy this week said 100. He probably is right. But once you get to somewhere around $7,500 silver and you have some serious shortages, the manufacturers are going to start screaming, saying, we can't find our silver. We're shutting down our plants. And at that point in time, I see silver basically designated as strategic metal. So this silver squeeze movement, I mean, it was destined to happen because there's just not enough silver, and we're going to find that out. But again, until we get over $30 silver, slow down, because
So Don, are you on record now saying that silver, don't expect it to go too much over 100? Am I hearing that correctly, or am I misunderstanding you?
I'm saying that there's a very strong possibility. I'm saying it's going to happen, but I think that silver could easily go to $300 because of shortages if the governments don't do anything. If the governments make it a free market, if silver is a free market asset, I think silver goes to 300. If they start cracking down, I don't know if we get to 300. Again, it's just a possibility. And I'm the only voice out there. I haven't heard anybody else say this. But yeah, that's my expectation. And that's why I plan to be selling a lot of silver miners from $50 to $100 silver. I want to basically lighten up, take my profits, because I don't want, announcement. If they make an announcement overnight, the price of silver could drop $25 in one day. I don't want to be sitting on, all these profits with this hanging over my head. So by $100 silver, I'm going to be out of probably 80% of my silver miners. I'll keep the gold miners, but that's how worried I am about silver being a strategic metal. For instance, there's 1 billion ounces right now in the ETFs, 1 billion. So, I mean, they can make those illegal overnight. I mean, the G7, because all the silver's in the G7 countries. So if the G7 decides, okay, let's do that, let's make it a strategic metal, it's going to be tough. I mean, people talk about the black market keeping the price of silver up, but if you dump $1 billion of silver onto the market, it's going to take a few years for that silver to work through. And then if there's only silver coins being, sold, basically your investor amount's going to drop from, 40, 50% all the way down to 20, 15%, just on the coins alone. But you're going to have inventory of silver for, a good 5 years. So I don't see silver blasting off to 300 if that scenario unfolds.
Well, Don, thank you for your updated view on the markets. To learn more about Don's service, go to goldstockdata.com. Again, Don, appreciate you coming on the show, and we'll be touching base in a couple of months.
All right. Excellent, Bill. Thanks for having me back.